Afternoon, ladies and gentlemen. It's Eric Coffin. I'm speaking to you from the May 2018 version of the Metal Investors Forum, conference that Scott Gibson and I own. I have one of the presenters, and like all the presenters at MIF, he's also under active coverage by, well, 3 or 4 of the newsletters, chief among them being mine. I've been following Fireweed since before it IPO'd last year. Brandon just put some pretty big news out. They had their first economic study a few days ago. And I think, maybe let's start with just a very quick version of the timeline, because it's very impressive how fast you guys have moved from pre-IPO to the development stage you're at now. It's been really quick.
Yeah, I mean, it's a year ago, early next week, that we IPO'd.
Right.
And since then, we commenced our drill program, we updated a resource, and we've now put out a PEA. That was kind of always our goal from the get-go. I think perhaps we'd underestimated exactly the demands on the staff to get there, but we did it, and I'm extremely happy we got there.
Do you want to give us some of the highlights from the PEA that just, after all, only came out a couple of days ago? So some of the viewers may not be aware. It's a very large resource. Maybe start there, and then some of the PEA highlights, because you just put out a very good initial study.
Yeah, so our resource update in January established this as one of the premier sort of zinc lead silver assets in the world at 11.2 million tons indicated and 39.5 million tons inferred, both around 10% zinc equivalent. So that was a pretty great place to start for a PEA, because you're dealing with a lot of tonnage from which you have a lot of flexibility in terms of mine schedule and targeting.
Okay, and your PEA numbers, you came in, what about, these are Canadian dollars, 405 million capex, NPV 8, which was nice. After tax, I think you were 448 million NPV.
Yeah.
26, was it?
24%.
24% IRR after tax. 18-year mine life.
Yeah.
So really nice. I think you can touch on how important mine life is for a base metal company.
Yeah, that's the unspoken kind of thing, or perhaps poorly understood thing about mining projects when you're looking at something like an IRR, that short mine life projects need sky-high IRR because there's a lot of execution risk in a short project, and there's a lot of commodity risk in a short project. When you have an 18-year mine life, you are a multi-cycle mine. So you go through a couple ups and downs in the zinc price and lead price and silver price. So what that means is that as long as your project can keep the lights on during the down times, you're around through 2 cycles to print money during the good times, which is kind of the classic MO of the zinc market and zinc miners. So that was important for us to establish. This isn't a project that you need to time the commencement of production exactly right to catch the cycle.
Right.
You can kind of build this when you want, and you're going to catch a couple cycles. And so that's not just critical in terms of economics, in terms of the real economics, not the assumed economics, but the real economics. It's also critical in terms of permitting and community support, because communities are much happier to support projects that have multi-decade mine lives.
Right.
Because this is actually a meaningful impact. This is a generation of work for a community. So in terms of that sense, in terms of the soft side of it, that's a huge win.
Now, I mean, of course, you guys have got to this new resource. You have the PEA. You're not going to stop now. I mean, you're about to start this year's exploration program. I think it's a few days away, and there's still a lot of, you still think you can make this bigger, better. There's a few things you're going to be doing this summer.
And I think our messaging has always been since inception that look, we're building towards this PEA, and perhaps what we didn't really message well was that that's now a stepping stone, right? And what the PEA does, it allows investors to conceptualize what the project might look like as a snapshot, but it allows a management to see what are my major risks and what are my major opportunities. How do I mitigate those risks? How do I maximize those opportunities? We have a good sense now of what the real true levers of value are in this project, and how we take it to not just what is already a very healthy return and a very buildable project, but how do we take it to kind of the next level in terms of that real crazy good project.
All right. And so you've got, for instance, in terms of the resource itself, you're going to be drilling shortly, and you see 2 or 3 pretty obvious places where you think you can either add tons or bring in some more high-grade tons, or maybe both.
Yeah, so we see a lot of opportunity to add tons that are both high grade or substantial. You know, we see pierce points where with a single drill hole you might add 1.5 to 2 million tons at a reasonable grade, right? So that's a pretty good return. And these are pierce points near the proposed underground workings, or right along proposed underground workings, adjacent to stopes planned in the conceptual mine plan. So this is something that you don't need to price in a bunch more underground workings to get there. It's like, boom, that's pure gravy if you hit on that, right? So we see a bunch of targets like that in these step outs that for every one we hit, it just you know, the economics just get higher every time. So that's a pretty exciting place to be.
And you're, of course, well financed. You had a very successful, I mean, both of your public financings were very successful, the IPO, but you just did a fairly large one and brought in I would say a significant and strategic shareholder with your last financing.
Yeah, so our last financing in February, you know, we went out for 10 million, and in 48 hours we closed 12.5. And the lead there was Resource Capital Funds out of Colorado, which for people familiar with Resource Capital Funds, perhaps people not familiar with Resource Capital Funds, this is a group that does not take their due diligence lightly. They really dive deep, and they did dive deep on us before they committed to that. And taking a 13% stake in this company is them saying pretty emphatically that they think it's either saleable or buildable.
Yeah,
because that's their only way out, right? Yeah. So that's a pretty big, you know, vote of confidence for us.
Okay, well, this is being a great story. It's done very well in the market that not all base metal deals have, in part because you know, Brandon and his board did such a fantastic job of structuring the company, not just the project, but also on the financial side, the stock side. It behaves very well and reacts well to news, and you're about to be generating a whole bunch more drill results. You know, there'll be updates to the study later this year. The real news flow for a northern project is just ramping up now, and it's on the back of a great PEA. So I think we're going to have a pretty exciting summer for Fireweed.
Yeah, I think so.
Thanks for coming by.
Thank you.
Okay.